Hey traders, John Howell here today. I have an awesome update for you today. I'm going to be sharing with you today the short-term analysis across stock market, metals, miners, all these markets out there right now. Bitcoin, Ethereum, what's going on right now with all these markets and what's coming up this following week and maybe the next few weeks or two. Short-term analysis, important patterns. We're going to be looking at also trade the trend and not your ego and your thoughts. So many people I'm seeing right now, and I'm going to share with you, there's so many bearish comments. I'm going to share some with you as well too in today's video. And what most people are bearish in these markets here right now. I'm going to share with you the biggest mistake that people are making right now that is destroying your trading success. Also going to talk about Ray Dalio's clear warning signs or clear warnings on what's coming up right now so we can get ready for it. Listen to the legend, not your thoughts and your ego. Also, 3 stocks set to start a multi-year breakout. Most people are not even focused on these stocks right now, but I'm going to show you the pattern. I'm going to show you the setup. I'm going to show you reasons why this is likely to have a multi-year breakout. Also, I'm going to be walking you through the 100-year Dow Jones chart that shows you a high probability when this whole thing is likely to come to an end, aka the debt bubble. You know, when is the rooster going to come home to roost? That thing, you know what I'm trying to say? That thing there, right? When all this will end, right? When is it likely to end? I'm going to show you exactly here. I'm going to show you the exact thing there. Also, gold, silver mining stocks. It's endgame for now. No, there's not more upside to come. Most people think, oh, okay, it's going to just bottom. We're going to go for another really big move to come. Not right now, right? We need just a little bit more time to refuel. I'm going to show you exactly what that chart is. And then also, my number one investment for 2026. So we have a lot of things I want to cover with you right now. So let's get straight into point number 1 here in today's awesome update for you. And that is short-term analysis. Let's actually start off with the good old markets here. And we'll start with the good old stock market here and the stock market analysis. And then we'll get into all the other markets as well too, right? So good old short-term analysis here, and this is the actual Dow Jones. The number one thing here with the Dow Jones is we actually are in a very nice trending environment here, okay? Now, there's 2 things that I like to use, and there's 2 things I will always trade with. Firstly, trend analysis, and also, which is trend analysis simply means like, are we making significant higher lows? Because you know, higher lows are upward trend, right? Higher lows are upward trends. We do know that, right? We do know that. So if that's the case, and the trend is your friend until the end, right? We do know that. Some people, make their life hard for themselves, and that's no. The trend is not my friend, right? So the trend is your friend until the end, right? But then also trade with if there is a strong momentum. There's a high probability of success going with that momentum and not going against it. And that is, see this is a 52 moving average on the daily charts. If the moving average is trending up like that, that means we have strong momentum to the upside. The moving average is a momentum indicator. And if there is momentum, so if there's a strong moving average to the upside, you have a high probability of success going with that and not going against it, right? So, looking at that level from there, and as you can see, look at this here, right? Up, sideways, drop, strong moving average, boom, drop, boom, you get the point, right? So let's bring on some good old trend line analysis here for the very short-term analysis here. And we'll show this here on the Dow Jones, and check this out. This gets really, really cool, right? We had a nice little, bring on the last 6 months with the data, right? And we can see here, and I'll draw one through there as well too, right? Because there is definitely one through there as well too. Okay, cool. So, as you can see by looking at the charts right now, is what do we see here, right? What do we see? We see a nice, obviously trending environment, but we see the Dow Jones has been doing these what's called pullbacks, right? Pullbacks, whipsaws, whatever you're gonna call it, right? Pullbacks. So, the thing for me is we're very, very, very strong trending to the upside. But look at this here. Nice big movement to the upside, and we're getting a pullback here. So if I bring on my short-term analysis last 3 months here, if we are right now on the Dow Jones, we are definitely holding this level from here and holding this level from here, okay? So if we start to get a break up through there, just like we did through here, that tells me we're getting ready for the next, all right, up, swing, break, leg, up, swing, break, and then up we go again. Now, if that does happen, then I actually have targets on the Dow Jones, and these are the targets from here, right? So 41,050, and then also 51,000 is where we're probably likely to go to on a short-term level basis. So a conservative target would be a nice, good right where we are right now. That's a nice 5% rise, and potentially even a nice, good, say, 8 to 10% rise if the Dow Jones does hold it. Now, the thing about the Dow Jones is the Dow Jones really hasn't been doing much for all these last few years, right? Pretty much range bound. So this point through here is what? It's just starting to break out. It's just starting to move. You see that through there? So yes, the Dow Jones is here. So we're probably going to end up through here somewhere, right? X marks the spot up here somewhere by the time we finish, because we're just starting to get out of this range and we're starting to see this big movement to the upside. So get ready for more upside to come. NASDAQ. Let's go look at the we'll look at the NASDAQ 100 here, okay? NASDAQ 100. Let's look at this level from here. It looks at the last 6 months from here. Nice, good uptrending environment. Same analysis, right? Higher lows and moving averages trending up. Go with that, okay? 7 times, 8 times, you're likely to do really well, right? Success is on your side by doing that. Going with that. Right? So anyway, so nice, beautiful upward trend from here. Yes, we are getting a little bit of a correction from here, guys, but the momentum and everything is still up right now, okay? Do not be fighting this market. No. No fighting market, okay? Strong to the upside. Here we go from here. And as you can see here, there is a thing called change of trend in the markets, okay? And a lot of people don't understand this one simple thing. There are pullbacks, right? And there are pullbacks which makes the trend, right? And there is change of trend. Let me show you this here. This is where a lot of traders get this really mixed up. I'm seeing a lot of traders thinking this drop here is now the top in the market. Now, here's the thing. A top in the market is what? A change of trend, right? If we've been an upward trend from here, people saying this is a change of trend now. Now, let's actually qualify that. Let's actually use proper techniques and not our thoughts. Because remember, our thoughts is where we get in trouble. I think, don't give a shit. If you're saying this is the top and this is now a change of trend and we're going to start to trend down, we're going to start to go down from here, let's use qualification proper techniques to say this is an end of trend. Let's look at this level here. What is an upward trend? An upward trend is what? Higher lows and higher highs, right? We know that, okay? Now, here's the thing. A lot of traders then, if you know that, then what is a downward trend? A downward trend is lower highs and lower lows. Well, if you know that, all right, let's squeeze this chart up. If you know that, then here's the thing. A change of trend simply means if an upward trend is higher lows and higher highs, the most important part is just higher lows. If it comes down, okay, so higher low, upward trend, down, higher low, upward trend, down, higher low, upward trend, down, higher low, upward trend. All right, their higher lows are upward trends. In a downtrending environment, we have what? We have down, up, lower highs, rally, lower high, rally. So in a downward trending environment, the most important part to you is the lower highs. So we get rallies, lower highs, and we start to break lows. That's a downtrending environment, right? You probably know this. This is Technical Analysis 101. But let's actually bring it back to Technical Analysis 101 then, okay? Again, we don't know, but let's listen to Mr. Market, all the collective of wisdoms, Mr. Market knows right. That simply means that as long as we keep making these higher lows, the buyers are what? The buyers are still in control and the upward trend is still here, right? We know that. That simply means that if the market does rally down and break the low, that's now the warning sign of trend is over. But until we get at least a warning sign, the trend is what? Still up, right? This is where a lot of traders, they start to incorporate their thoughts and their opinions. Rule number one is the trend is your friend until the end. I don't give a shit about what you say. I don't give a shit about your indicators, your stochastics and MACDs, RSIs, divergence. Your thoughts or a YouTube video, I don't give a rat's ass. What I give a rat's ass is what is Mr. Market telling me? Because Mr. Market is always right. And a lot of traders get this wrong, right? They think a market drop, like we've been getting here, right? This market drop here is the top in the markets. If it is the top in the market will start to give us warning signs. And that warning sign is what? It'll start to break the low. But if we're making higher lows and we haven't at least broken the low yet, so we're no longer making lower lows, guess what? We're still in an upward trend. If I bring it down to here and up and then down and up and down and up and down, what is happening? We are still at this low. This low here is still higher than this low here. So Mr. Market simply says, guess what? This could just be another higher low and away we go. But John, you don't understand. The top is in. That's it. It's all over. Really? Whoa. If you've been using that same analysis all this year, you've been 100% wrong so far. Ooh. Let's just say you're right now. Let's just say you call the top right now and you get it right. Okay, cool. Well, now you have a strategy that works 10% of the time. Good job with your long-term success. Do you see what I'm saying here? No, don't do that. Don't do that. No, go with the market. Higher win-loss ratio. Much more of a success. Less stressful. People, pick the top in the market. No, the top is not in right now. In fact, it's the opposite. We're getting ready for a face ripper moving, okay? So that's the Nasdaq there. So still making higher lows, and away we go, and the momentum's still strong to the upside. S&P 500, the same situation, right? The same situation as I said before. If we look at this level from here, this is up and then coming down through to here, right? We're probably going to break out soon. We're probably going to see a nice move back to the upside from here, right? So just remember, guys, that this market is still making higher lows right now. Low, higher low. This still could just be another little higher low in the market. And the moving average is coming straight up. Okay? Don't fight the market. Don't fight the market. Okay, cool. So that's what's happening right now on the indices overall. Let's go have a look at the gold and silver price. So actually, let me bring this up to here, okay? So the gold and silver price right now to me is that if we have a look at this level here, let me just take this off the screen. I want to show you this level here because I think it's really important to understand. Let's go to here. Okay, cool. Right. So what happens here is there's a thing called what's called price and time. Okay, price and time, or the energy phases. And the energy phases simply states this: is that if we have a big move to the upside, it's used a lot of energy from here. And if we've used a lot of energy, therefore we need a lot of energy to then, we now need to refuel again, okay? Energy using, energy building, energy using, energy building, right? We go through these phases. Therefore, we had a very big energy using phase where the market was using all this energy, right? Think about this as a athlete, right? He had a really big training session. Does he A, just need a short-term little break, or B, does he need like, right? He's had a really, really big training session, right? He needs a real big rest, doesn't he? So the purpose of saying that is that we've had this move down. We need a lot more time here. We're probably not going to be doing much when it comes to silver and gold from here. We're probably going to start to head down towards at least this low level down around the 44 level. Looking at the gold price from here as well. So gold is probably going to start to head down towards the 3,600 level. We're just holding through here. Even if we do get a bit of a rally, short-term rally from here, it's probably going to be very short-lived, and we're probably going to start to head down towards the 3,600, possibly even the 3,500, which is that level from there through to there as well too. So this is sort of what's going on right now on the GDX as well too. GDX right now, big. You can see this nice support level all through here. We had a very big move to the upside. So what's happening with the mining sector overall as a whole is I see this thing coming down towards this low level from here, right? So we may get a little bit of a bounce, probably going to do that, and then start to come back down from here, right? We're not ready yet to go for another very big move, right? Remember I said before, this hole through here is using energy. It used energy. We used a lot of energy for the last 2 months from here to here. We now need probably another good couple of months. So the rest of this year, the metals and miners are off limits now. They're probably not going to see really big moves to come over the next at least for the next couple of months from here, right? So GDX, same type of thing from as well too. GDXJ, same type of thing. Big move up. We're probably likely to see this thing coming back down towards this low level from here, right? Big high lows, and then a move to the downside as well, right? Same for the silver mining sector. Well, the silver mining sector is actually almost back at its level from here. So that's the SIL, and this is the SILJ as well too. So really big, again, big moves up. We've just started to see this correction of this level from here. We're probably not going to do much. Now, just remember, traders, whenever we go through these different phases, right? There's the energy. This here is energy using, right? And we had this very big energy using phase. And then we go through these energy building phases. Energy building. And now we're in part of this, what's called this level from here to here is the energy building phase. Now, right, see how we just go through these different phases, energy using, energy building, right? It's what these markets do. So the purpose of me saying this level here is that a lot of traders, what they do is they try to trade in that energy using, the energy building phase. And a lot of the times the energy building phase can be what? Quite volatile from here. Look at this here, up and down, up and down, up and down, right? Come down, come up, come down, come up. And they think this move to the upside is probably going to be the start of the next big move. It's not ready yet, right? It's not ready yet. We'll probably need a couple of months worth of, at least a couple of months worth of this level from here. But this is the worst time to be looking for a good breakout on any market, because then we typically go through this. This phase from here, which is the energy building phase, and this can be quite volatile. And this is where a lot of traders get chopped up big time. You saw this here. If I go to the actual gold price, right? Look at this here. The same for the gold price. Look at this here. The last time we went through one of these energy building phases, look at that there. But look what ended up happening, right? Down, up, 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 down, up. And then we started the breakout. But people trying to trade through this level here, where we are right now, and we've just started another one. So same thing from here. We're probably going to get a lot of volatility, and it's going to fake a lot of people out. We start to get a move to the upside. They're going to be, oh my goodness, it's good. Gold's getting ready to go again. Quick. And then it smacks you in the face. You're trading these energy building phases can be quite volatile, and they suck you in big time. And as you can see here, this one here took 4 months to refuel to go for another really big move in the equity market there, right? Look at the interest rates here, right? Interest rates. What have interest rates been doing here now for the last 6 months here, right? Remember I said before, now we're looking at what? Downtrends, right? Don't fight the market, okay? Moving average is coming straight down. And look at this here. Lower high, lower high, lower high, lower high, and now we're rallying back up to here, right? Lower highs all the way down, and the moving average is coming down. If you say now, you have to be on a right now, at least a short-term basis, you have to be bearish the 10-year interest rates because the market's going down. But John, it's going to bottom here. It's like, if you say that, then what's making you say that? Well, I think, John, nothing, right? Nothing. Because guess what? This is the reason why most traders don't do well out of trading, right? They try to pick bottoms and tops, where your high success rate is just going with this level here, right? 7, 8 times out of 10, so on and so forth, right? So that's what we look through there. And this is now what, the 30 year, same type of thing. Look at this here. It's been doing this here, right? Down, lower highs, lower highs, lower highs. We're rallying back up. We're probably going to do this over here, probably going to head back down again right now when it comes to, this market from here. And we're starting to get what? The moving average was flat. Now we're starting to trend down from here. We're probably likely to continue down. Wherever the trend is, lower highs and moving average down, go with that, okay? If you go against that, you're going to be wrong probably at least 7 times out of 10. And you're 3 times that you're right, guess what? You're probably only going to have small profits. So it's a win, it's a loss strategy, okay? Now, that's where the TLT comes involved with it. Look at this here. The TLT has really started to increase in changing of trend, right? We're starting to do the opposite to what we saw there. We're starting to get the higher lows, up, down, higher, low, and we're still coming down through to here. And the moving average is starting to trend up from here. So with this, what's happening right now in the TLT market, guess what? We're starting to change the tune of these markets from here. We're starting to change the momentum of all these markets from here. Now, let me show you something here. Let me go show you something here when it comes to the good old Bitcoin and all sort of stuff. Look at this here. So Bitcoin right now on the weekly charts, this is the big weekly charts. Look at this here. So the big overall long-term weekly trend in Bitcoin is up right now, right? As you can see. So what we're probably experiencing right now is just another one of these. Up, down, high, up. Overall down. Up. Overall down. Up. Probably overall down. So we could still even come down to this level from here. But we're still making what? Significant higher low. We're probably going to make a higher low here soon and go back up again. Because the overall trend is still massively to the upside. We're just getting these multi-month phases where the market becomes very volatile. See what I'm saying from there? And the same for Ethereum as well too. This is Ethereum right now. Ethereum right now to me is probably like, I really see Ethereum, this is now the start of a very big bull market. Now, hear what I just said there, okay? A start of a very big bull market is what? Up and then down, higher, low. That's what a bull market is. People get so mixed up with a market going down as bull market ending. No. This is where most traders' thinking is incorrect. Use proper techniques. A trend is higher lows. All right? John, tell me something. Okay. For a higher low to confirm, it has to come down to create the higher low. So when the market is coming down, okay, what's happening right now in the equity market, right? The market has to come down to create higher lows because that's what an upward trend is. So as we're experiencing this drop here, it's probably just going to be a nice 50 to 60% retracement overall. This is a weekly chart here before we continue back up again. See what I'm saying here? Just this one simple rule, the trend analysis, and actually understanding it. Not just saying it, but understanding. Actually, some people understand it, some people know it, and they still want to try to pick tops and bottoms. And good luck to you. Right? So, anyway. So that's what I'm seeing there when it comes to that. Now, as I said before, a lot of this phase through here is this phase through here on the, all right, let me do this here. Oh, I just put on all those moving averages and I don't want that, right? So this phase through here right now is what's going on through here on the daily charts. That's why it's always important to keep an eye on those weekly charts, because yes, while we're starting to come down here for multi months, right? 1, 2, 3, 4 months now, what is really going on right now? All this is just a nice move up for a while. It's coming down and it's being volatile. Guess what's probably going to come real soon? I'm expecting over the next couple of months, we're going to find a bit of a bottom here and we're probably going to go for another really big move to the upside. And then we can start to use projections and all that sort of nice, funky down home country goodness. And all right, let me now take this off the screen. And this is where, once we do this here, now we can start to see where Ethereum's likely to go to, right? So if it does find a bottom here and we do break out, once we break out of that level from here, then we're probably likely to see Ethereum. This could just be a bit of a big pullback overall. And see what I'm doing here, guys? So what am I doing here right now? All right, I'm looking at the big picture because it gives me an understanding of what's going on. Just because we're going down here for multiple months through here doesn't mean things are changed. Short-term downtrend, yes. But this is where we need to keep an eye on the big weekly charts, because just like here, and just like even with Bitcoin, look at this here. Look at all these periods through here. Look at this here. Sideways, but big move. Look at this here. Why did this... Remember I said before about the energy building phases? This here is the energy building phase, and then we had a big move up. And we had this point through here, but then we had another move up. See what I'm saying? Like these really big moves from here come off the back of what? Come off the back of the energy building phase. That's where if we go back to the Ethereum here and we look at this here, we can see this is where now looking at the big picture analysis, okay? So the big picture analysis from there. And if we start to look at, say, probably some extensions, right? We can start to do from there to there, and we start to go down from there to there, right? We're probably likely to get to, I'd say 10,000. Yeah, 10,000, 9 to 10,000. So if Ethereum breaks out, Ethereum is likely to get ready for a nice big move towards there. So there we go, guys. That's an update for your when it comes to the short-term analysis. Let's move on now to this one right here, which is trade the trend and not your ego or your thoughts. Now, I've already walked through a lot of this here right now, but the reason why I'm bringing this up here is because this video here that I did just recently, and what let me see, can I, there we go, that's a bit better. Look at this here, right? So in this video here, I talked about why the greatest explosion blow off top is about to start, okay? And this one here said, thanks, John. I'm already in TLT SPY. That's ready to rock. I'm in TLT Massive. I'm ready for apocalypse. Okay. The apocalypse is probably not going to come right now. You're in TLT. Okay, cool. But if you're in TLT because you think that the apocalypse is going to come, no, I don't believe that. Look at this here. Blow off top was April to November. Never having a sell-off. Never having a sell-off. Fed is behind the curve already, and they will panic in December. SMH already topped. SPI confirmed it. Reversal today will be interesting. No, it didn't. No, it didn't. No, it didn't. Okay? This is the whole thing here. What did I say here? Point number 2. Right? Hey, there we go. Point number 2. Look at this one through here. Trade the trend and not your ego. Don't fight the market. Right? Let's go back to here. If we go back to the SPY. Right? Let's go back to this is the S&P 500. The S&P 500 is still doing what? It's still making higher lows. But no, stop. You're not smarter than the market. I'm not smarter than the market. Pull your head out of your rear end and stop trying to think you're smarter than the market. Well, the top's going to be in right now. Let the market tell you when the top's going to be in. Right? Let it start to. And what is that? What did I say before? The first sign that the top's going to start to be in is the market will start to break these lows significantly. Then we can start to give us a warning sign, right? That's a warning sign of the top being in, right? So until that happens, like, no, what? Like, look at this here. SPI confirmed it reversal today. I don't see that, right? This is the low points from here. So really, that's that major low point from that was that last major significant low. Up, down, higher, low, up. We're still here right now. So we really need to start to confirm breaking past this level from here and then we can start to call top. But every person that's been calling top for this entire year has gotten run over. And it can continue. The market can continue from here, right? Continuing on from this level from here, right? Doubt it. Again, look at this here. Look at all this here. John, are you short gold and GDX? Why would I? Okay, Mr. Peter thing here. Bit of FYI for you. Just because I think something's going to correct, because that's what markets do. They go through the energy building using phases, then we go through energy using phases. Just because I think something's going to correct doesn't mean I trade that correction. You may be wrong. I may be wrong. You do know I'm already right, meaning a month ago I was calling a correction and we've got it. That means I can't be wrong. I'm actually right because it's already happened. These markets are in large of trading ranges. Someday you might be right. Right. Good on you, man. All right. You know I'm already right because we got the correction and I was calling for the correction and it's already happened. That means I was right. So that means someday, no, it's already happened. Anyway. And the last bit from here, look at this here, right? Markets already had blow off top. Highs are already in. Many bear market signals triggered. It's down from here to next year. During this phase, surely we'll witness some strong rallies, but the top is done for the year. Wow, man, this guy must be a legend in the market, right? Let me guess, this guy's been calling top all year. and he's been wrong. What makes you think you're going to be right now? And again, let's look at this here from your trading perspective. You're calling top right now. I guarantee you, you're going to be at least wrong 7 times out of 10. At least. Because at least that many times the trend continues. And it continues and it continues. So what did I say here? This is the biggest mistake I'm seeing that most people are making right now. They're trading with the trend. They're not trading the trend. They're trading their ego. Listen here. I've been trading the markets for 20 years. Right? Listen to me as your coach. If you try to pick tops and bottoms in the markets, you are doing yourself a dissatisfaction. Why try and do that? When you know you're going to be wrong at least 7, 8 times out of 10. That means you're only going to be right 20, 30% of the time. Man, you need a really, really big profit just to break even with that success rate. Why are you doing that for? Don't do that. Don't make life hard for yourself. Trading is hard enough, right? Anyway, continuing on here, right? Now, point number 3 here. Ray Dalio, clear warning sign of what's coming. If you guys have seen recently, Ray Dalio has and did this article here, stimulating into a bubble. Ray Dalio. Let's check this out here, okay? So, Ray Dalio talks about, did you see, again, this is Ray Dalio, stop thinking you're smarter than him. He has the experience, 5 decades of trading experience and investing experience, largest hedge fund manager. Listen to him, not your ego. That's right. I'm talking to everyone here. No, Ray Dalio is going to be wrong here, right? Listen to him. Did you see what the Fed's announcement that it will stop QT and begin QE? Again, listen to this guy, right? And we go through this whole level from here to here, right? And etc. We go through all this level from here to here, and essentially we can see what's going on here, right? But if I bring this down to here, look at this here, right? Now, he says here, look at this. It will be reasonably to expect that similar to 1999 or to 2010, 2011, there would be strong liquidity melt up that will eventually become too risky, right? Why? Look at this here. This time is different because the Fed will be easing into a bubble. So if you guys are calling top right now, you know you're going against the market. The charts are still saying we're in an upward trend. And 2, you're going against one of the largest hedge fund owners of the planet, who's one of the most successful hedge fund owners on the planet, who's studied history and market analysis and booms and bust cycles. So go against the market and go against people like Ray Dalio. You will be wrong most times, right? There will be strong liquidity melt up. Now, what does that simply mean, right? Yes, we do go through swings, right? The market will go up for a few weeks, and then we have a drop for a week or 2 to create the high low. That's what a melt up is, by the way. It's not just straight up from here. That will eventually become too risky and will have to be restrained. During the melt up, so get ready for the melt up. He's given us clear warning signs of what's coming. Here we go. And just before the tightening, what does that mean? There's probably going to be a melt up over the next 6 months. Melt up simply means what? Just so you know what a melt up is, we go up for a little bit, then we pause for a week or 2, then we go up a little bit. Right, that's what a melt up is, right? The melt up's not just straight up every single day. Just so you understand what a melt up is, okay? Let's go back to here. Just before the tightening, that simply means that there's going to be a melt up, and then there's going to be a tightening again. What is a tightening? The tightening is the Fed starts to raise rates. That is enough to rein in inflation. So Ray Dalio looks like he's getting ready for inflation. That will pop the bubble. It's classic, the ideal time to sell. Right, look at this here. While I would expect the mechanics to work as described, the conditions in which the QE will take place is very different from those existed when they took place before. This time is different because this time easing into a bubble rather than a bust. More specifically, in the past, QE was deployed when asset valuation was falling and the economy was contracting and inflation was low and there's debt liquidity problem. So QE was a stimulus in depression. Today, the opposite is true. Right? So QE today is stimulus into a bubble. So for you guys out there, and remember, for you guys that, like if we look at the, remember these guys from here? Remember these guys? Right? You do know, just look at what the market's doing, right? So if you're using big fundamental analysis and tops and so on and so forth and cycle analysis, it's bullish. If you're using technical analysis, it's bullish. No, John, right? Uranium or metaverse, right? I hope you get what I'm trying to say here. So listen to Ray Dalio because he's giving you clear warning signs of what's to come. Now, let's go look at this here earlier. On to point number 4 here. 3 stocks set to start a multi-year breakout, right? A multi-year breakout. What are those, right? Let's check this up here. So there's different patterns that I see happening time and time and time again, right? So if I show you what those stocks are, I'm going to bring up this chart here. This is a logarithmic chart on a monthly chart, okay? Now we're looking for a multi-year breakout. Now, what those charts are, first one is CVX. CVX is the first one that I believe, when the market's been doing nothing from here, I believe now, once we start to get a break above these highs up here, around that 190 level, once we start to get a break above here, this is probably going to start off a very big multi-year bull market from here, all right? And now, again, just so you understand, what is a bull market? It'll break out for a while, and then it may pull back for a couple of months, and then it continues up, okay? That's what a multi-year bull market is. Just like look at gold there, right? So the first one here is CVX. This one here is set to me, I believe, is getting ready for a multi-year breakout. The next one here is obviously the energy sector. Same thing here. Now, what I'm saying here, guys, is this is a monthly chart. Please understand the context of what I just said there. Monthly. That means it's probably going to take a good 3 to 6 months to finally start to build out here. It's not going to start now and break out here. I don't know when that's going to happen. So don't be so, oh, John said breakout. Let me get in now early. No, what are you doing? Right? So no, it's probably going to paint a few more bars here, and then we start to see that there. Moving average comes up, and then we start to get a breakout here. So the next 3 to 6 months, I'm getting ready for a breakout on XLE, and then within the energy sector, XOM. These 3 markets right now are set to have great, just incredible moves, right? Why? Because it gives you the same type of trading pattern that produces big moves, and that is when the market has a nice move for many years, we do nothing for 3 years, then the big move comes. Just look at gold, right? Look at the gold price. Look at the gold price. What did gold do before the breakout? Right, it's all the same thing, right? Up for a few years, sideways. When we got the breakout, we've been doing this for 2 years. So for you guys that are trying to chase gold, oh my goodness, gold's going to go to 5,000. Let's get into gold now. You're chasing it after the 2-year big bull market. Why? Go look for those markets that hasn't been in a big bull market. Position yourself for that. Okay. Now, moving on. There we go. 5. Point number 5. The 100-year Dow Jones chart that shows when all this will end. Right. Look at this here. So this is the Dow Jones. This is the Dow Jones chart right here. And as you can see, if I look at this last 100 years, there is major cycles that come into play. We do roughly 10 years now, so that's roughly, it might be 12, it might be 8, right? But roughly, it might be 15, roughly 10 years, 16-year bull market. Roughly 10 years, again, not exact, 16-year bull market. Roughly 10 years, 16-year bull market, okay? Since where we are right now, we're 12 years in. So that tells us what? What does that tell us? That if we're looking for the rooster's going to come home to roost, or what is that saying? Chicken come home to roost, all that sort of stuff. Guess what? No, not yet. Yes, we're going to get our corrections like we can see here. Look at this here. Correction, right? This is Trump getting elected. That was the COVID scare. That was the recession fears. That was the tariff fears. Look at this here. Boom, 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 boom. So yes, we're probably going to go up and come back down. But overall, we have an overall movement. So when we do get another scare of a 15, 20% drop in the market is very long-term bullish. We still have another probably roughly 5 years to go. So before we're getting into early the 2030s. And then yes, then in the 2030s to 2030 to 2035, that's when you can probably start to see, based off this big 100-year cycle, that the big 100-year cycle is what? Telling us when that debt problem is probably likely to be a problem, because it's talking to us right here. Make sense? So for you guys that are saying that it's the end of the road and there's a debt problem, and you know what? There's been a debt problem for 10 years. It's all good though. It's all good. So anyway, point number 6 here, gold, silver, mining stocks, endgame for now. Now, one thing that I'll bring up the gold chart here, but I want to share this with you here, okay? The reason why I'm doing this point number 6 in this update for you is because a lot of people think, okay, we just need a cooling off now and we're getting ready for another really big move. Listen here. Class in session. Let's go to the GLD here, okay? Let's go. I'll just bring up the gold price. Let's bring on the gold price. Okay, so gold price. Okay, so this is the gold price here. Now, class is in session for you guys. What do you notice about? Yes, we are in a very big bull market here. Okay, very big bull market. But there's different phases in this very big bull market. Okay, there's different phases. When we are in a very big bull market, we go from no bull market at all for many years, and then we break out. We start a big bull market. Okay. So if you're looking to get in early on a very big bull market, wait for someone that hasn't done much for a few years and then start the bull market, okay? Now, look at this here. When I say endgame for now. What do I mean by that is there is different phases in the gold and silver price here, okay? There's different phases within gold and silver price, or there's different phases in a bull market. And that is energy using and the energy building phases. The market went up for a few months, so it need a few months of market went up for a few months, energy using, then it went sideways here, energy building for what? Roughly 3 months. Same thing, another few months up, energy using, 2-3 months pullback. Another couple of months to the upside, and another 2-3 months here. This one here was about 3 months of a very big bull market here. So therefore, this point through here, this was roughly 3 months, 3 months. This one here was 4 months. Why was this 4 months here? Because notice the energy using phase, this point right here, it actually used a lot more energy here, right? Notice this big leg here was a lot bigger. So therefore, the energy using was a lot bigger. So therefore, it needed a little bit of extra time to refuel before it goes for another big move. Why am I sharing this with you? Well, look at this here. What was this point from there to there was what? The energy using phase. And this energy using phase, because it's used energy, right? For something to have a very big move up or down, it's using energy, then buying it. And then the market gets tired. So, what are we doing right now? We have entered what? Another one of these, and these. That's where we are right now. So we've entered another one of these. So we're probably going to go for a 3 to 6, maybe 3 to 6 months of doing nothing. And then, then it may get ready for another big move. But look how this works, okay? Look at what the market does. And this is the reason I'm doing this video here is because I know some people are thinking, okay, we just need a bit of a pullback. It's gonna bottom soon, and we're gonna go for another big move, and gold's going to 10,000. Here we go. No, look at what the market does. Now you may be right, but first we need what? We need another one of these energy building phases, and these energy building phases are what? They're volatile. Let me bring on a actual daily chart now for you, to show you what I mean here. They're volatile. They're not. This is where a lot of traders, they get this mixed up. Look at this here, up and down and up and down and up and down, and then we start to break out. Look at this here, up and down, up and down, up and down, and then we break out. This one here, up, down, up, down, up, down, up, down, up. See what I'm saying? These energy, this one here, same thing, look at this here, sideways. The energy building phases, energy using, energy using, energy using, energy using, energy using. What's going to happen right now? We're going to get this here. So don't expect, no. Don't expect gold to be getting ready for another really big move to come, because we're going to get another one of these. And yes, we may get a bit of a short-term rally, but guess what? We need at least a few months of energy building before it gets ready to go again. Look at what gold's been doing. So if you're long-term bullish gold and you're like, right, we've had a bit of a drop and we're getting for another move, not too fast, my Padawan. Right, and the very last point here that I have in today's update for you is my number one investment for 2026. And that is what? That is the number one investment for 2026 to me right now, with what's going on and what we've seen here, what I've talked about before with Ray Dalio. What's likely to happen with the QE, right? Remember, this is the Ray Dalio here. First line, did you see the Fed's announcement that it'll stop QT and begin QE? What does that mean? QE, right? Essentially, lower interest rates and higher bonds. And if we look at the very big picture here, one of the things that I love looking at is that, let me show you this here. If I look at if I'm looking at big things, if I'm looking at big swings, I'm looking at markets here from a big cycle perspective. Gold, silver is up here. It's interesting to see that this is where gold, silver, metals are right now. Maybe crypto. Stock market. People are fearful still right now in the stock market. Maybe hope, right? But what's down the bottom here? Down the bottom here is what? The bonds, right? The bonds. And the bonds will have their day and time again. Everything has a cycle. What goes down comes back up, and so on and so forth, right? So if I bring this up to here and I bring on, say, TMF, look where we are right now, right? We're starting to bottom through here. So just like all cycles, yes, the bond market will go through a cycle where we start to pick back up and we start to see a rally. So my number one investment, guys, out of this level from here, for 2026 is the bond market, TLT, TMF, as I see interest rates continue to come down from here. So there we go, traders. That's an update for you guys today. Guys, first link in the description there. I'm giving away a free book that I've created about generating the X factor as an unstoppable winning trader. And also, if you'd like to apply for what's called my 1% group, where you're with me every day for all of 2026, it's a 1 year, 1% coaching program. Then you can see all the details there to that there in the link in the description. Have a good day, guys. So traders, before you leave today, I want to give you an invite to apply for my John's Inner Circle coaching program. This is my top level coaching program, and this is for only serious people only. This group right now currently is only around 15 people, so it's only a real small group because I'm with you every single week in that small group. This whole group here, this John's Inner Circle, is about giving you exactly what you need to know on how to identify a really good high quality setup, trade management techniques, how I scan the markets, and so much more. Plus also every single week I'm doing live coaching sessions that help you with every single area that goes into becoming a good trader and so much more. So this is only for serious people only. This is my top level coaching program. It's only a real small group. But if you're at the point right now where you are absolutely serious about becoming disciplined and you really want to make commitment to becoming a good trader, then my Inner Circle may be a good fit for you. If you go to getjohnshelp.com, that's an application form. Go fill that out right now, and you and I will have a good chat on the phone, and I'll see where you're at, and you'll be able to see more about the actual coaching program. And if we're a good fit, then maybe we can move together from there. But if you're real serious about this and you really want to take this to a whole brand new level, and you want to be more than 95% of traders lose money in the markets, and if you finally want to start to crack into the top 5%, and even the top 1%, then this may be a good fit for you. So go to getjohnshelp.com right now. Apply for that. It's only for the first 10 people only. And I look forward to speaking to you on the phone real soon.